Reasons why women require life insurance. Today, women have more financial responsibilities than ever before. How will your family members or loved ones manage financially if you die? Whether you're single, married, employed, or a stay-at-home mom, you most likely need life insurance. At the very minimum, life insurance can aid in paying for the costs of funeral and burial services, estate administration, outstanding financial obligations, estate taxes, and the uninsured expenses of a final illness. So who needs life insurance? Working women. Increasingly, families rely on the earnings of two working parents. If you're a working mother, your income can have a considerable effect on the quality of your family's lifestyle. Your income helps cover the cost of ordinary living expenses like food, clothing, and utilities, and it provides savings for your children's college education and for your retirement. Life insurance safeguards your family by providing proceeds that can be utilized to replace your lost income if you die prematurely. Single women. Frequently, women, like men, think that it's not necessary to purchase life insurance because they have no dependents. What's often overlooked is that life insurance can provide necessary funds to pay off car loans, education loans, debts, a mortgage, taxes, and funeral costs that might otherwise be the responsibility of family members. Also, the cash value of permanent life insurance may be used to supplement retirement income. Single moms. Whether you're divorced, widowed, or simply a single mom, you're most likely primarily responsible for your child's support. If you die prematurely, life insurance can supply ongoing income to cover childcare costs, medical expenses, debts, and future college costs. Stay-at-home moms. Maintaining a household is a full-time job, and you have many important roles and duties. The cost of the services carried out by a stay-at-home mom could be rather considerable if someone needed to be hired to do them. If you die, your surviving spouse may have to purchase services like childcare, transportation for your children, and housekeeping. Taking over these added responsibilities could cause your spouse to shorten work hours, resulting in a reduction in income. Proceeds from your life insurance can help your spouse pay for services that keep the household running and enable your spouse to continue working. Family caregiver. Many women find themselves providing care for both children and elderly family members. Taking care of an aging parent or family member can include paying for the costs of adult daycare, uninsured medical expenses, and extra transportation. Adding these expenses to the costs of maintaining a household, childcare, and college tuition can be economically overpowering. Regrettably, these added financial responsibilities often continue after your death. Life insurance provides a source of funds that can be used to help pay for these expenses. A business owner. You may be one of the increasing number of women business owners. If you die while owning your business, life insurance can be used to provide cash for company expenses such as payroll or operating costs while your estate is being settled. Additionally, life insurance can be a useful tool for business owners structuring buy-sell arrangements or providing benefits to key employees. Life insurance types and options. Life insurance comes in many different sizes and shapes, and determining the policy that meets your needs may depend upon a number of factors. Understanding the basic kinds of life insurance can help you discover the policy that's appropriate for you. Term life insurance. Term life insurance provides a simple death benefit for a specified period of time. If you pass away in the course of the coverage period, the beneficiary you name in the policy receives the death benefit. If you live past the term period, your coverage ends, and you get nothing back. The cost, or premium for the coverage can be fixed for the length of the policy term, usually 1 to 30 years. Or it can be annually renewable, meaning that the premium can increase each year as you get older. However, the premium for term life insurance usually costs less than the premium for permanent insurance when all factors are the same, including the death benefit. Whole life insurance. Whole life is permanent or cash value insurance that provides insurance coverage for your entire life. With most whole life policies, part of your premium is added to the cash value account, which earns interest. Some whole life policies also pay a dividend, which represents a portion of the company's profits made during the prior year. The cash value grows tax deferred and can either be used as collateral to borrow from the insurance company or be directly accessed through a partial or complete surrender of the policy. It is essential to note, however, that a policy loan or partial surrender will decrease the policy's death benefit. There could be income tax implications, and a complete surrender will terminate coverage entirely. Note, guarantees are subject to the claims paying ability and financial strength of the issuing insurance company. Universal life insurance. Universal life is another type of permanent life insurance with a death benefit and a cash value account. A universal life insurance policy will generally provide very broad premium guidelines, that is, minimum and maximum premium payments, but within these guidelines you can choose just how much and when you pay premiums. You're also free to change the policy's death benefit directly, again within the limits set out by the policy, as your financial circumstances change. But if you want to raise the amount of coverage, you'll need to go through the insurability process again, probably including a new medical exam, and your premiums will increase. Variable universal life insurance. Variable universal life combines all of the options and flexibility of universal life with the investment choices of a variable policy. You determine how often and how much your premium payments are to be within policy guidelines. With most variable universal life policies, you can direct how your premium payments are invested among policy sub-accounts, but you get no guaranteed minimum cash value or death benefit, and the investment return and principal value of the investment options will vary. Joint and survivor life insurance. You and your spouse may choose to buy a single policy of permanent insurance that covers both of your lives. With first to die, the death benefit is paid at the death of the spouse who dies first. With second to die, no death benefit is paid until both spouses are deceased. Second to die policies are commonly used in estate planning, to pay estate taxes, and other expenses due at the death of the second spouse. Aside from the fact that two people are insured by one policy, the policy characteristics remain the same. Bottom line, life insurance protection for women is equally as important as it is for men. However, women's life insurance coverage is often insufficient. It may be time to consult an insurance professional who can help you assess your life insurance needs and offer information about the various types of policies available.